Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. As you guys know, thanks for joining me. This is our morning call. So ARMR Insiders, let's get ourselves ready for the trading session. And I'm just going to go over some of my thoughts about this week and where we are in the market cycle. So let's just dive in. A couple of quick thoughts before I do. Don't forget, as always, the ARMR Report is a guide. What I'm trying to do is share with you 30 plus years of experience managing my own capital and capital for investors. And I boil it down into what I believe is something easy to understand and simple to execute. Our job is to get rid of all the noise out there and put ourselves on the right side of probabilities over and over again when reward is worth risk. I'm going to explain how we do that and what we just did in the last 4 weeks, because it's an absolutely perfect illustration of what the ARMR investing way is all about. So we build our whiteboard, which is our research. So we have our list of stocks we want to own. So we're ready. Then we use our algorithms to tell us when to add risk and when to take risk off. Okay. And then we wrap it all up with a bow of stop losses to make sure we protect ourselves from ourselves. Okay. The only way to make a probability algorithmic strategy work is to cut your losses quickly and continue to rotate into the next opportunity. So when you capture the upside dramatically outweighs whatever quick losses you take. That's how the strategy works. If you don't marry all this with the stop loss discipline, it's a waste of time. So I'm going to talk to you about a couple stocks. I'm going to share with you some names that I want to own today. So we'll be looking at these names in the live trading desk to start the session. And if we get the right setups, we'll put them in the portfolio. Some will day trade. Others will add to the portfolios and hold them as swing trades or investments. So I'm going to go over with you what those names are. Before I do, I just want to walk you through a couple thoughts. First of all, it seems like every week for the last 4, I end the week on Friday telling you how important the weekly candle is. And so that means how important Friday is. All right. And so here we are again. It's been a great week. It's been 4 weeks of alpha creation for ARMR Portfolios. And thanks to all ARMR analysts helping us out in the community, right? So I like to say we're an army of analysts followed up by a tank division of algorithms. And that's how we create alpha, right? So all of our eyes on all of those names on the whiteboard, all the conversations we have in the Slack room, in the live trading desk, bubbles to the surface, the names that are most important to focus on. Then we use the algorithms to see where are the entry points. And that's what's been creating all this alpha for us, that combination. And it's a strong combination. So I want to thank you insiders for your participation in that. Okay. So first thing I want to do is take a quick look at, and don't forget guys, this is your ARMR Insider website section, right? So I'm updating the portfolios every day. You can see right here the dates. They tell you if you log in and you see a date that hasn't changed, like the risk monitor June 1st, it's because there's nothing new to say. Right? We shifted over to risk monitor yellow. We've been managing success and we're waiting for the next situation. So this could stay yellow for months and this won't change. But as you can see here, June 10th, June 10th, June 10th, everything's been changed. Okay. And of course the captain's log I updated this morning. Don't forget, if you're not receiving the emails, every morning I send an email out letting you know what's been updated and a quick synopsis of what's happening and a link so you can just click right on it and get to this space. If you're not getting that email, please let me know. Okay. So let's dive in. Here's the weekly chart pattern of the S&P. We are in what I call a mechanical bull market. It started back here when the Fed said they're going to buy everything in sight, and it continues to this day. At some point, the Fed will stop buying everything in sight, and this trend will break, and we're going to have to get a lot more defensive. But the key to the ARMR report And what separates us from other carnival barkers and hacks that are on YouTube and elsewhere, CNBC, is that I don't predict the future. I don't know what's going to happen next. We read, we act, we read and react, and we use probability matrix, and we use stop losses. And that's it. I don't guess. I don't look at all the news stories and run pillar to post because maybe there's inflation, maybe there's CPI, maybe there's oh my God, interest rates are going up. It's just a whole bunch of stuff to get you off your game and stop you from making money. And so we get rid of all that noise here. Simple to understand, easy to execute. So this is a weekly chart. Each bar is a week. And what I'd love to see is for this weekly bar to extend higher and close on a weekly all-time high. Can you imagine if you're a fund manager? Can you imagine if you're one of those hacks I'm referring to who's been talking about the dangers of this market and it closes on a weekly all-time high and you've got massive amounts of cash in your portfolio because you're afraid to put money to work 4 weeks ago when you should have been putting money to work, because that's when the probabilities were at their highest that reward was worth the risk. So those people are going to look at the market if we go out at the end of the day Friday on an all-time new high, and you're going to start to see some money come flying into the market in the next couple of weeks. So I like to say I don't make predictions, right? But we do spitball here, and I let you know what I'm thinking, and I always tell you the caveat is I don't know if it's going to happen or not, and I'll cut my losses if I have to. But as I said last Saturday and maybe the Saturday before, but certainly last Saturday in our week in review, I'm expecting the market to rip into the end of the month, end of the quarter, end of the half a year, 4th of July weekend. This is just classic time for the market to do that. And if we can get a nice print at the close on Friday, that'll just be another piece to the puzzle fitting into place, okay? I shared with you guys last week, so let's just go over the ARMR process a little bit so you all understand how this works. We have risk monitor red, green, yellow. I just boil it down to those simple 3 stages. There's many nuances to those stages, and I try to share them with you on these videos. I share them with you in the Slack room on the live trading desk. So what happened 4 weeks ago is we had risk monitor red, and I started buying indexes. And some of you were confused. How can you buy indexes, risk monitor red? So what I tried to say is, look, it's a simple 3-step red, green, yellow. But let's be honest, the market could easily be broken down into every hue in the rainbow. Okay, so this particular red signal to me 4 weeks ago was since there was no confluence, some indexes were going up, some were going down. That made it more of a muddled kind of setup. And so when we saw that double bottom on the 50-day moving average and it reversed, and I'll show you that right now, even though here's the double bottom we were looking at. See that right here and right here, okay? So when we saw that double bottom and move higher, since we were still risk monitor red, the first thing I did was put money to work in the indexes, right? So we bought the index only portfolio, boom, got 100% invested even before we went risk monitor green. And I said to you, I'm anticipating, I'm looking at my algorithms, right? I'm the author of them, so I kind of know what they look like. And I say, you know what? This looks like it's going to flip green. And so I'm going to start by putting money to work in the indexes. The next week it flipped green. So then we shift over to buying industrials, NASDAQ 100, bigger cap names. And if you take a look at the spreadsheet, just to remind you real quick, take a look at the spreadsheet here. So we go into ARMR Portfolios, click on it, scroll down. So here you can see, what's happening end of day, right? So each day I post what we've changed. And you can see right here, there's an LR, there's an MR, right? Okay. what these are, if we scroll down to the spreadsheet now, I break it down into lower risk, moderate risk, higher risk investments. Of course, the yellow is what happened yesterday. So you could immediately see what we changed to the portfolio. All right. So what we do when the risk monitor goes green is we start filling up the portfolio with lower risk, moderate risk type of investments. Those are based on liquidity, size of the company. Like first things we start buying are a Coke, a McDonald's, a Microsoft, names like that. Okay, bigger cap name, Ford, GM, bigger cap names. Then when we shift over to risk monitor yellow a couple weeks ago, and I shared with you last weekend, I said, if this market's really going to take it to the next level, if this is a really good risk on entry point, then the innovator stocks need to come back to life. Those are the stocks that have been destroyed this year. They need to come back to life. And that will be the final confluence piece to the puzzle that should create a lot of alpha. That's what's happened this week. So we positioned these names last week, and we continue to add to them this week, and it's creating even more alpha for us. Let's take a look at what I'm talking about. All right. This is the S&P. Let's look at the ARK funds. Now, this is skewed. ARKK is skewed because of the, I don't know, what is it, 7% maybe, I think, exposure to Tesla, okay? But this is the one that I like to follow the most because of the makeup. Other than Tesla, it's got, it's the innovator stocks, okay? So let's go look at the weekly chart. I want to show you two chart patterns that really blew my mind when I looked at it today. First of all, there's the weekly downtrend, weekly now, in the innovator stocks. And you can see this is the week that it broke the downtrend. So we started positioning these stocks last week, expecting this to happen. We added the ARK funds to our index only portfolio last week, and boom, we got the breakout that we were looking for because the algorithms were telling us, the ARMR algo was telling us that the probabilities were at their highest, that if we were to buy ARK funds right now, we would get movements higher. So probabilities were at their highest, rewards worth risk. We use a tight stop. We put the position to work. Simple to understand, easy to execute, get rid of all the noise. And it paid off this week, right? So there's the pop. But look at this chart. This is the IBD 50. This is a weekly chart of the IBD 50, which is another innovator type of name. See, it says IBD 50 innovators, right? Look at this weekly chart. It's just so compelling. Huge rectangular box here, breakout, pennant formation on top of the box. Now you can see it's having a nasty week. This is not my favorite index to own, but I like to watch it overall. It could be negatively affected based on how fast IBD moves into or out of different names that they consider to be innovators. Okay. So I like to look at IBD 50 and ARKK as my innovator investments. And I'm just looking at the pattern itself. I'm not worried too much about this bar right here. Okay. Because there's just some specific names in here that, didn't respond well to earnings. But the look at the pattern. You break out of that pennant formation, there should be some significant upside. So we've got what we're looking for, that piece to the puzzle where confluence is everywhere and alpha is being created. So here's what I want to end with, just so you understand the ARMR investing way. We get ourselves on the right side of probability when rewards worth risk. We use tight stops because our best trades never challenge the stop. There's Ford. Just to give you an idea of what I mean, like our best trades never challenge the stop. That's a weekly chart pattern. We picked off Ford in here, right? In fact, this was the day. We bought it a little bit late. Some ARMR insiders bought it perfect right here on the 50-day. Notice how even though we bought this day, it never challenged the low of the day we bought. So when I say the best trades never challenge the stop. It's the low of the day you bought or the day before if you're buying right. You want to keep shifting your portfolio into the ideas like that till you capture enough of your capital in names that never challenge the stop and you let them run. What the ARMR investing way does not know, okay, what we don't know is how much money we're going to make when we start making money. I don't know how big the move's going to be. I don't know how long it's going to last. All I do know is that if we put capital to work when the probabilities are in our favor over and over again and rewards worth the risk, we're going to get moves like we've had in the last 4 weeks. Alpha's been created. Net worth is increasing. Principal is protected. The absolute worst case scenario at this stage would be a round trip to break even. We get out at break even and principal would still be intact. It would be terrible because it would have been 4 weeks up and then boom, and we give it all away. But we would not cut in to principal because we raise our stops at this stage. So aggressive investors or conservative investors, I don't know how you're going to be using the ARMR report as a guide. But if you are, I'm not even sure if aggressive and conservative is the right way to call it. If you are the type of individual who wants to trade less, who wants to be, I'm going to put this in quotes because I hate this term, long-term investor, okay? I hate it because how do you know that you're a long-term investor? The market's going to tell you, okay? If you're a long-term investor or not. You use your stops correctly, some positions will just keep on running. We've owned pipelines and McDonald's and a number of different names in the portfolio for the last few months through all different market cycles because they keep going up and they don't challenge the stop. So chances are I'm going to be long-term investor in the pipeline stocks because they're not going to challenge the stop. I could own them for years. But I don't know that. The market's going to tell me what positions I'm going to be long-term in and which ones I'm not. But I digress. Let's get back to my point here. What we don't know is how much money we're going to make on each risk on entry point, on each risk monitor green signal. Some will fail and will get stopped out right away. But from a statistical standpoint, most of them will go up. And what we have to do at that point is manage the success. So if you're somebody who says, I want to trade less, I can't sit and stare at the screen all day, okay, then what you do is you fill up your portfolio with lower to moderate risk ideas and you use very lenient stops. So what you would say now is, I'm fully invested, I don't know, 3 weeks ago, I got fully invested. I'm making money everywhere. You would raise your stops to break even at the very least so you can't cut into your principal at this stage. And then you just let them run. That's not how I would run money, but I'm just saying some people would do that. As long as you can't cut into your principal, you're playing with the house's money and you see how much money you can make and you trade less, okay? And at some point, that investor, if the run is big enough, has to raise their stop again and say, okay, I've been invested for 2 months now and I'm up 20%, in my entire net worth's up 20%. And I want to make sure I capture 10% of it, a half of that gain. I don't want to give away. So you raise your stops again and you let it keep going. Okay. If you're a more aggressive trader, let's put it that way, more in the swing category, then what we've got on our spreadsheet are targets. And what you're going to do now, right now, and again, we can go look at the spreadsheet again. So right here are our targets. You can see this category right here. Okay. So every time a target is hit, we boldface target, 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 target. And right here, the note, we reduce the position, we reduce the position, we reduce the position. Okay. The object is to have this whole column say target hit, right? That would be ideal. In some bull markets, the entire column says target hit. And so what that means is when the targets hit, we book a partial profit because we want to get paid on the hard work in the last 4 weeks. Whatever partial profit fits you, your risk tolerance, your goals are different than mine. I might book 10%. I might book 25%. In some cases, I book 50% of the gains. And I raise my stop to either break even or a higher level. Could be a moving average, a trailed stop at the 50-day or something like that. And then I step away and I let the portfolio do what it's capable of doing. Thank you, Wim Hof, for that comment. All right. So that's the stage we're in now. I say we're in managed success mode. What we don't know is how big the success will be. And what we must do now is manage the success. What we don't want to do is chase. There's nothing to chase now. We put the money to work right. Let everybody else chase and drive our asset prices higher. Then we book profits at targets. If you're a conservative investor, you begin building up a cash position because you're booking profits and you start holding on to a little bit of cash. You were 100% invested 3 weeks ago. You may, as the targets get hit, you might get up to 25% of your portfolio if you're booking 25% gains. 25% of your portfolio will be cash. 75% invested, you let it keep going. If the whole world, falls apart, you've already got a cash position. So as Andy Grove said, the ex-CEO of Intel, who made Intel the name that we all knew and loved, God rest his soul, wrote a book called Only the Paranoid Survive. That's where we are. That's the stage we're in right now. If we don't keep thinking ahead and keep figuring out how to protect our net worth from all the hard work. Not only did we have to work hard to earn the money, now we're working hard to put the money to invest it correctly. We have to think about how to protect that capital going forward. If you're an aggressive investor, you cull the profits and you roll them into new ideas and you keep pressing the bet. If you're conservative, you start building up cash. Those are my thoughts for you this morning. I hope you find them helpful. I'll take a couple questions before I have to go here and meet everybody at the ARMR Pro Live trading desk to get ourselves ready for our intraday trading techniques, which we use to help build portfolios of investments. We're not just day trading there. I'll give you an example. Here's an example from yesterday's live trading desk. Okay. The object here was to own shares of CrowdStrike. We like that name. Okay. And so what we did yesterday was we put a position on CrowdStrike right here, right there on the ARMR VWAP, this black dotted line. You're now looking at a 3-minute bar chart. So this was kind of wild and crazy in the morning. Put a position on. We took a quick loss. Right here, we put a position on, took an immediate loss. It cratered down, rallied up, pulled back, held the VWAP. We put a position back on at the VWAP, and sky's the limit. We now have a good position on. So this is what we're doing on the live trading desk. You could day trade it and book a profit, but we added it to the portfolio because we really want to own CrowdStrike. All right. We already own shares of net in the portfolio, and that's breaking out and looking stellar. Okay. The top of the leaderboard for me, or I should say the top of the whiteboard, top shelf of what I might add today is Palo Alto. I really want to own that as well. That chart's 6. So this will be the first stock I look to buy this morning. I'm hoping to get it on weakness. It's looking to be up 0.5% at the open. There was a question. There was a question of an insider was asking me a question. Brian was asking me. First standard deviation below the VWAP and the importance of it. I can't remember exactly what I was talking about, but it might have been this chart right here. Let's take a look at CrowdStrike again. It is. Okay, good. I was lamenting to you guys yesterday But I really should have been putting money to work in CrowdStrike right here. Now, I bought it up here, and that's okay. We made money. But the real entry point was right here for two reasons. Number one, the pullback to this yellow line, which is the ARMR moving average on a day trading level, okay, often sets up support. So that's number one. It came right to the ARMR moving average and stopped. Number two, this teal colored line right here is the average true range low of the day. Now you're going to notice it moved up dramatically from the start of the session, and that's because this is a proprietary ARMR ATR. And we infuse top day and multi-day volatility into the ATR so that it changes during the day. As you can see, that's incredibly effective on CrowdStrike right here. So not only did it come down to the moving average, it came down to the ATR. What was the risk of buying the position right here? The risk would have been selling it right here. Tiny stop. It would have been nothing. I should have been all over it right there. And if not here, then this is the rule, Brian. This is for you. This is for you, Brian. So the trigger that I like to use is the first standard deviation below the VWAP. So here's the VWAP, there's black dots, right? I can get this, there you go, right? And this blue line that turns yellow and then it turns back to blue, this is the first standard deviation below the VWAP. This green line is the second standard deviation. This dark blue line is the third. Typically, when you break below the VWAP, you'll find support at the first standard deviation. So if you go below the first standard deviation and then pop back above it, that's the trigger of where I would buy it. That bar right there is actually the bar that I would buy had I been paying closer attention, okay? That would be the bar to buy because it closes back above the first standard deviation. And that can create the rip back to the VWAP, which is what it really did here. And you can see it went right to the first standard deviation above the VWAP and put in a reversal and pulled back. Okay, so standard deviations around VWAP are really important. And I always say that, you know, some stocks, they can trade below the VWAP for a while. And as long as they hold that first standard deviation, they can drop below for 15 minutes. But as long as they hold that first standard deviation, it's still very bullish. And as you can see, it turned out to be very bullish. Okay, any other questions before I go? If not, I'm just going to go through top names on the list. Saber said that the weekly chart of gold doesn't look good. I don't know what you're talking about. In all due respect, the weekly chart right there, gold looks fine to me. So I'm not sure why that bothers you. If you look at the gold stocks, so we reduced our exposure on precious metals. Don't forget, we reduced it from something like 40% down to at one point last week, we were around 17, maybe 15 to 17.5%. So I bumped it up a little bit yesterday. And here's why I did that. So now I'm back to about 20% exposure, which is all I want really. But that's an unbelievable chart pattern right there on the small cap silver stocks. So, you know, it gapped down, it held the 25-day moving average, it had a nice move here. So what we really need to see is a strong close to the week. A strong close of the week. Come on, guys. Let's see if we can get a strong close of the week on silver, breaking out of a major pennant on the silver stocks. Silver leads gold in many environments. And I added shares of Agnico Eagle. So I cut down other positions, booking profits at targets. And cutting down those positions allows me to add a new position to the portfolio. And so I'm adding Agnico Eagle as it's one of the strongest names in the space. As you can see, it held above the 25-day moving average. It's in a very tight pattern. This very light line here is the standard 200-day moving average. And it's going to close above that if it closes up here today. So I wanted to add Agnico Eagle. And I've got my full complement. Now, on the flip side, I'm totally out of Canadian cannabis again. All right, so we took a shot at Canadian cannabis. They ripped higher and then had a nasty reversal. All right, and so what we did was protect capital. We protected capital. We exited. This is a nice up move this day on Kronos. It came back down. We got out of it there. And it was down another 4 or 5%. We didn't lose money on principal, right? We just basically went up, came back, we got out. All right. We actually made some money in CGC and Telray. Not a lot, but a little bit. And so I just don't like the patterns. They didn't complete the way they were supposed to, and they reversed. And so what I'm doing there is sending all of these names back to my day trading list. Now, what we're going to do is day trade these Canadian names again, because they create unbelievable day trades. But I'm not going to hold them overnight until the patterns get better. And I'll tell you something else. On the chopping block for me is MSOS. Okay, that is not a good chart pattern. This needed to be above the 50-day moving average by now, and it's rolling over. That's a problem for me. Now, if there's a strong close to the week and it pops higher, okay, I might hold it. But this is clearly something I could be selling at the end of the day. And I'm more than happy to put on twice the position size if it can close above the 50-day moving average at some point in our lifetime. But I'm getting worn out on that pattern, and I don't like the way it looks. And so I may step aside there. And I'll tell you what, I got too many other ideas I want to buy. I need cash. So I may be doing that today. Here's another name that's on the chopping block for me. We own GE. That's a great pattern. I don't know why the stock's going up. My stop is definitely going to be the low of yesterday, which is the 25-day moving average. If it can't hold here and hold the low of this big up bar, then I don't want to own the stock. But I'm going to give it the rest of today and see if it can rally. Seems like it's up a bit this morning. We'll see if it can run. Okay. Top names on my list to add to the portfolio. That pattern on Fate is unbelievable. Now, we day traded it yesterday, and I carried it, just, full disclosure, I carried it overnight. And I told you guys in the Slack room, I'm holding this thing overnight. Okay. This was the day trade on our live trading desk. All right. We picked it off right here. Oh, yeah. I wanted to share this idea with you and tell you why we did this. I know I'm going late. Maybe I'm going to carry this right to 9:30. But I just want to share this with you. So here's right here is the average true range high of the day. And so sometimes I tell you I sell things at the ATR. But when the ATR is so close to the opening range high, and when the ATR equals the first Fibonacci up on the day, that's a very tight average true range. And so one of my favorite trades is when the average true range is that close to the opening range high. If it pops above the ATR, I get long right there. And that's what I did on this bar right here. And notice how it never challenges the low of that bar, right? So the stop would have been the low of that bar. Never challenged it, ripped higher the rest of the day. And the daily chart looks unreal. So I'm going to try to get that into the spreadsheet on weakness this morning. But full disclosure, I already own it. I'm going to hold it because I think there's a lot of upside to this stock. All right. I got PSTG on my list that I'd like to own. Palo Alto, I already talked about. I'd like to get a shot at Zscaler and Palo Alto. I'd like to add both of those to the portfolio next to my Cloudflare and CrowdStrike. So those are some of the names on the list. All right, guys, I got to get going. If I can get the live trading desk set up. Have a safe trading day out there. I am not going to be doing my video, our weekend review on YouTube tomorrow. Taking the kids on an adventure. We're going to hop on a boat, and we're going to just point the compass north and see how far we go. Stay overnight somewhere, and the kids are just ecstatic. They're going to be pirates. So I'm going to be doing that tomorrow, taking the weekend off. I'll see the live trading desk participants, insiders in the next few minutes. I'll set up that call. I'll certainly be on for the 2:30 in-game update to wrap up our week. And I'll see you all in the Slack room. All right. Take care, everybody.